Morning traders, Paul here with GammaEdge. Today is Thursday, the 12th of January. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Overall, the market models remain bullish and are advancing. Short term, we just completed day 6 of a new long using our USC cumulative tick model. The other long-term models, the composite, the NAS, ARCX, and S&P 500 are all looking very strong and are continuing to advance. These are longer term timers. They are not predictive, but they are indicating the path forward. The Russell 2000 is a laggard, has been a laggard, probably will continue to be a laggard because it's the small caps. It's within what we call the ribbon, and it could actually break either way. It might be the first sign of trouble if we do see it drop below the ribbon. Market breadth, as measured by our 52-week new high, new low indicator, continues to show this bullish broad support. We just completed 7 days to the upside, and the next slide has an expanded view of that. Plus GEX moved up to 4,100 in the SPX. Minus GEX remains at 3,800. So these are the goalposts. We've been bouncing back and forth between 4,000 and 4,100. The relative magnitudes of these two show that the short-term speculators are doing what they do. They're piling on 4,000, then they're taking 4,000 off, or they're piling now on 4,100 and setting that in their crosshairs. So be advised. Upper transition is positive transition level, which if you're in the Discord, you know exactly what that means. We're calling that right at the 39.15 area. This is the top of the range. We are significantly above that at 39.70, and the rubber band doesn't stay stretched too long, so we are cognizant of a potential pullback. Who knows what the CPI is going to present to us. So to sustain this, we need either one of two things, or both to happen. We need transition to move upward, and the way that we get this to happen are that ITM calls, which are below our current spot price. We want to close those, and that'll expose some of the puts that are there. Actually, that does push that transition upward. And two, if folks think we're going to continue north and play that to the north side, often we see puts, which are cheaper as we move higher. We'll start seeing those open. Both of these actions will push transition upward and would actually be a very constructive outcome for the bulls. The overall structures paint a clear upside to this 40.55, 40.65 area. The 4,000 strike, which we talked about last night in the open mic session with our members, has been completely absorbed and is now all call dominated. That means there are no speed bumps that are of any significance between here and the 40.55, 40.65 zone. This isn't to say that we're going to go there, but what it does show is that today's action most likely will drive the change in structure, not that the traders and dealers are going to have to navigate the existing structure. It's a pretty clean slate to the north right now. Very striking, very unique in this transition. The same images of July are appearing right now, and we had a fairly good run in July. Downside areas that we could test, and our areas of liquidity are as 38.60 and just above 38.15, a full 100 points below that 39.15. With the left goalpost minus GEX in the combo complex strongly holding 3800, we don't think we're going to get a close below 38.15 today. Of course, CPI can always derail things. Expected move today is extremely high, over 5%, open, high, low, close. That's a conservative number and exists if you're a premium seller and are trying to capture some of that. This is a wide view captured on the widescreen for the cumulative tick model. Across the top are the 52-week new highs, new lows, and you can see I started counting when we started getting the 52-week new highs outpacing the new lows. This is a little weaker here. I'll explain this here in a second, but 4, 5, 6, 7. You can see that breadth continues to expand on the bullish side. You need this in order to have a sustained bull. It's that simple. This is why we watch it. It is a lagging indicator. I get it. We get a lot of criticism over that. but it's a confirmation indicator. And because it is slower moving, it gives you confidence to start doing your progressive exposure. Down here is the cumulative tick, this bolded line here. And anytime, the measure is close to close, and so anytime the bolded white line closes above the previous close, that is a day count, and you can see that progressively we've been closing higher and higher. This is on the USC model, the US composite. And what that does when we start crossing what we call the ribbon, you can see the narrowing of the ribbon, and you can also see the inversion where the red shortest term moving average has now crossed the longest term moving average. We don't use this per se on the short-term timer, but it gives you an indication of where we've been and where we could potentially go. So now that we have the crossing into the ribbon, we exit the ribbon, and we are above the ribbon, that is a bullish signal. Doesn't mean it can't reverse, and it certainly will, but always be aware that once you cross above this, you're going to start seeing this, and this is a great confirmation in the period from out of the COVID lows, starting in late April of 2020 into May, June. This was a great indicator, and it helps you get long and stay long, and that's important. The two blue areas that I've circled here, I just want to show that the filtered cumulative tick, which we consider the big boys and girls action, relatively flat. So the pullback and the pricing that didn't go anywhere, no cause for concern. We didn't move much in the cumulative tick that you see here, but because there was no major action from the big boys and girls, we don't worry about it. Same thing over here. So here's yesterday, here's Tuesday. We had a little bit of weakness develop out of the starting blocks. You can see what price action did in the SPX. And then we moved north. And basically this is telling us that the big boys and girls were not selling. Now contrast that with what we see where I've got the green arrows, which show you what we call a linear up signal. This is sustained minute over minute buying. And when we see this, and when we see it appear in the filtered cumulative tick, you want to be a participant. You want to get long, or you want to get in the direction that you see here. And in this particular case, these are long signals, and you want to continue to increase your exposure. Some things that we've heard from members and from folks in YouTube and FinTwit community is that trend following is a difficult thing to do. We've been getting chopped, and I've highlighted that here in this yellow block. You're absolutely correct. Trend following, using a trend following indicator, will chop you up if the price action is horizontal. And you can see, in what you don't see is to the left, it still was choppy to the left. And so we've been getting chopped up, we agree. But the key here is to be ready when the trend starts. And we have the tools to do that, and you can see it here. All right, getting back into Gamma. All right, so we've moved back up to 4,100 from that 4,000 strike, like I said. Over on the SPX PM, for those of you who are tracking the PM settled complex, you can see actually that we have minus GEX that is above everything here. This is due purely to the JPM short call leg that is up at the end of March, right? It's basically just taken all the air out of the room. Not liquid, we're not worried about it, but just be aware that's why you see that minus GEX level in the SPX complex, PM complex. Over here in the combo complex, still very strong structure here, turning more green, which means more call dominated. In general, CPI has got everybody worried, and the expected move, open, high, low, close. Very conservative number, so selling above or below these levels at the higher implied volatilities could be a way to play that. The PM settled complex, as I said, we've got those different levels that are appearing here. One of the key things that I want everybody to be aware of, and I just talked about the JPM leg that's up here, is that we've got a nice green call dominated delta structure all the way to the north, runway to the north in the PM settled complex, which is the more liquid of the complexes. That trades more often than the AM settled complex, is very clean to the north. So just be aware of that. We are stretched, and as I said, when we get stretched, we need to see this transition range move upward. The only way that transition range moves upward is if we get more puts starting to dominate in this area, and we either get that through closing of in the money calls or opening of out of the money puts as the speculators step in. Either way, a healthy move here, and you've got to do the if-thens. The healthy move to get transition to move north for the bulls is to actually see some puts go in. So let's just watch and see what happens today. Taking a look at the 0 DTE, kind of a fat, ugly transition. Downside is in really disarray, I would say. The contributions below the 39.15 level today will be mixed. To the upside, we've got a lot of calls that are coming off, but note over here where it says net gex, the expiry for today is actually not that strong. Tuesday, Thursdays are generally weak. Today is no exception. So even with CPI, even with the predominance of calls coming off, it's relatively balanced, and we're not reading a lot into this today. Contributions and price, like I said, 39.15 and above are pretty much call dominated. Below 39.15, kind of mixed. We're not really worried about it. The combo complex is showing us a really good runway to the north and also to potentially to the south, but we don't think we're going to go there. There's a couple reasons here. So first of all, we've been seeing just calls get added. We've seen this advancement from 4,000 up to the 4,100 line. The fact that we had now completely absorbed, this was negative delta yesterday and positive gamma. The gamma is remaining where it is, so those short-term calls are doing what they're supposed to do. But now what we've seen is we've seen some puts being closed, which is allowing the out-of-the-money deltas from those calls to now start dominating. The fact that this has happened establishes a runway north, and we would not be surprised if we made a push upward here towards 40.55, and here's that 40.65, which is that JPM end of March upper limit right now. To the downside, again, a very clean structure, very narrow transition. When we see a well-defined transition like this, especially in the combo complex, and this week has been unique. We haven't normally seen such a tight range at this 39.15, 39.20 zone, and we held from yesterday. And you can see it's all call dominated below us. These are in the money calls, right? So the only way these start getting, we start flipping and losing traction here is if these folks feel that they're going to lose their profits, right? So as the yellow line, as spot price drops down, then we get fear and greed playing the role. The transition for that in the gamma, things start accelerating below that 39.15. Relatively weak compared to what we see up here, so we think we're going to remain in this area and it's going to continue to pull us upward. Just look at the magnitudes, the relative magnitudes of what we're seeing here in terms of gamma, and then this call dominated structure. We're actually, after CPI clears, we're favoring lower volatility and potentially advancing upwards and with the 4,100 target in our sights, if not this week, next week. So just be aware of that. Of course, CPI could change everything, and the only way it changes is a change in sentiment. So the structure is supportive to go north. The only way that we flip the model here is if people feel that they're emboldened to go to the downside. We start seeing speculative puts get opened. These in-the-money calls get closed because people are fearful of losing their profits, and then that could cause that reversal to the downside. But right now, we are not in that situation. Finally, last slide here, 4,100 upside, 3,800 downside. Here are the JPM strikes, illiquid, hanging out there. We're seeing this growth of this 41.45. This is the end of January. We're sitting up here. We're well up into this zone. And like I said, and we need to see a few things happen in order for transition to move up right now. And whether we get it or not is to be determined. That's a daily action type of thing. We haven't figured out how to really predict that. We know what we need to see, and we're going to be supportive to the bull case if we see transition continue to advance upward for the reasons I just said. Note that we could bounce back and forth between the 4,000 strike, or excuse me, the 4,100 strike and the 4,000 strike. Relative magnitudes are the same, so if we start getting a pile on for tomorrow for the 4,000 strike, or even the 40-50, you can see what's going to happen there and how that could potentially play out. So with that, I bid you farewell. If you have any questions, comments, come into GammaEdge.us. Up in the upper right-hand corner of that web page, there's a pricing tab. Fill out the blanks. Come on in, 14-day free trial. All the tools turned on. Come and ask your questions and learn what we're doing here. Follow us on Twitter, GammaEdges with an S, and here on YouTube. If you like today's commentary, you can let me know immediately by smashing that like button. And then, of course, we want you to subscribe, because Taylor and I are producing 2 videos a day, and we want you to see what we're seeing and figure out how to apply this to your trading style. So with that in mind, bid you farewell. Good luck to everyone today, and we'll see you in the Discord. Thanks.